We have Sonya Rocvil with us here today. Sonya, I appreciate you being part of this episode as we talk about asset management and everything associated with it. But you can find Sonya and her team at bedrockreinvestors.com. And I'll make sure to have that link in the show notes. And for the show notes, head over to reimastermind.net for that. But again, it's bedrockreinvestors.com. And Sonya is the principal and founder of Bedrock Real Estate Investors. You have a ton of other background here, and it almost makes me want to ask you why you chose real estate investing. Was it a part of subsidizing your income? Was it preparing for retirement? Because based on your CV here, you have quite the background.
So thank you for having me on your podcast today. So, I have to say, real estate investing is really more of like a second career for me. I started out in audit. My background is in accounting, so I, after college, did the public, private audit, and was in what's now considered a Big Four accounting firm. Stayed there for about 3.5 or 4 years. I realized I did not want to be a partner in public accounting. So then I transitioned and spent most of my career in financial services. And while I really enjoyed my career there, towards the end, I started thinking about, what am I going to do next? Because I didn't know longer term how I saw myself in the company. Great company, great people, but it didn't feel like another, couple decades worth of experience and runway there. So I just started. I live in New York. Buildings are all around us here in New York, as they are everywhere, but really congested in New York. And I really just started getting fascinated with real estate, with apartments. I lived in an apartment. I grew up in apartments. Then I started reading Robert Kiyosaki books and Rich Dad, Poor Dad. And that was a turning point for me. It kind of like something just flickered in my head, like, wow, this is, all this real estate. People own this, For me, probably not going to start out owning big buildings in New York, but this is really fascinating. And then as time progressed, and as I'm going to call it, luck would have it, turned out that my group in that company ended up getting all displaced. We were all laid off. And so I had a decision point at that point. What do I do? I could find another role. I could go to a competitor. But then there's this real estate thing that just really started really taking over my mind, I'll say, for that period of time and everything that I've been reading. So I just really jumped in and it was an opportunity for me that I knew I wouldn't really have again, especially if I started in a new role or a new job. I wouldn't have the opportunity to explore. And I got so much support from my parents, my husband, to just do it. Especially while my parents didn't quite understand, but my husband more so was a little bit more. And so I joined my RIAs. I found a multifamily investment group that was based out here in New York. They're not, they don't exist anymore. But at the time, that was my entryway into commercial real estate and actually multifamily, because I joined a few other groups as well. And that really just broadened just the thought that this could be a business. And I was not only intrigued, but I learned and I met business partners there. And that's how that was the pathway for me to get into multifamily syndication.
You mentioned the support you got from your family and your husband. The husband aspect is intriguing. Did you find that it was hard to convince him, or was that something that he kind of jumped right in with you? Was he learning about real estate investing at the same time as you? How did that go?
Well, he really also has an interest in real estate. And I think what helped is that we had been going to some of the RIAs together. So he was able to, experience and see what I was seeing at the same time. And then when we decided to go to this multifamily real estate group meeting, he was there too. And, he saw like the questions that I was asking and the interaction that we were having, the people that we met there. And, at first I was like, I don't know if I'm going to do this. He's like, but this is what you've been talking about for, over a year. Like, why wouldn't you do it? And so he actually kind of gave me that push to say, you know what, you have to, make sometimes these investments in yourself, in your next career move, in your next process to get you to the next level. And so, there are different paths to take, but I wanted to work with people who were doing things that I wanted to do. Like I mentioned, I didn't see myself investing in New York, and this group was also not investing in New York. They were in New York, but investing outside of New York, which was great for me because I wanted to see how that actually worked. People ask me about that all the time, and then they were working to identify deals and pull these deals together. And I thought, this is something that's really appealing to me. So it's important to, within your network, find people that you feel comfortable with, people that you think you can learn from, people who are doing the things that you want to do. And those that's the best way.
No, I just think it's also really neat that your husband was involved to a certain extent too. So it really helps, doesn't it? When you have everybody on board. I mean,
it helps a lot because there's a lot of sacrifices that you end up having to make. Now, when we made that decision, we didn't have children. And so, if I had to travel or do something, it was definitely more flexible. Sometimes he'd even go with me. But now we have 2 young children, and sometimes I do have to travel, and he's, holding down the fort really while I'm gone, and I'm trying not to be away a whole lot. But it's it's all a balance, and then making sure that he gets his time too. So it really does help tremendously when both people are on the same page, or reading from the same book, and like, what is it that you want to get out at the end, and and then you end up like writing that book together. It's not always Sure. It's not easy. It's definitely not easy, but it's easier when you're on the same page, for sure.
Well, let's jump into the primary topic here today, asset management. And with you and your background being a former auditor and just your financial background.
Yes. So I definitely am able to utilize my audit skills and my finance background in asset management, because some of the things that people always ask me about asset management, what is it? And so because they said, isn't it just the same thing as property management? Is really focusing on the day-to-day management of the property. You really need to be on the ground. You need to have not even if you have a smaller property, you may not have somebody physically there, but you need to have somebody who can easily go to the property to resolve issues or any problems that come up. So that's the role of property manager. As an asset manager, there are 2 big things. First of all, you're setting up the strategy for that property. What are you going to do to make it perform? And that's part of the original business plan that you put together when you were underwriting the property in the very beginning, when you were researching the market, when you were making sure that you had a plan as to how you were going to drive value for the property. So that's that value creation and that strategy creation that you're doing from the very beginning. And you're working with a property management to execute on that strategy. And if things aren't exactly going the way you're expecting them to be, you really have to ask why. That's always my auditor hat. Why is this not Why do we have a difference in our expectation for the number of units that are occupied? Why did the expenses go up? Why is revenue higher this month? Even if when it's good, I always want to know why, because you don't know if that's a one-time thing, or is this like something that you can expect more consistently, and then you can factor in, wow, this is something unexpected that's happening in the market. We're going to be able to get these increases. Or is it, that increase that you told me, it's really because this apartment was so below rent. This was the lowest apartment below rent. And then you got that bump up because of that one apartment. That's still great news, but that's not going to be the same for all of the apartment rents that we get, because the delta isn't that large, something like that. That is really the job of one of the jobs of of an asset manager, is to make sure that you're moving along in the plan, and then understanding why or why not, and then working with property management to make the changes to fix it. So it's very much so a partnership, and you want to have a strong relationship with your property manager, and you want to get the property manager that best suits your property. So if you're focused on primarily, A-class properties, then you want to have a property manager that can execute on those types of strategies. If you're really in workforce housing and C properties, it's going to be more challenging for that A-class only property manager to execute on the strategies, because they may not understand that resident base. So, those are some of the things that are important. But then another thing that's also very important about asset management, and I have to say, like, asset management sometimes doesn't get its props, because it's not the acquisitions piece, right? Everybody is really excited to get the deal, but then you have to remember, you have to keep the deal. You have to make it perform the way you said it was going to perform, because if you're syndicating, you're bringing in investors. And so you want to be as wanting to work as best as you can to execute on your plan. And so that's the other part of asset management. It's to me, it's also investor relations, and making sure that you have a strong relationship with your investors as the deal takes place. I remember a colleague of mine told me about a deal that someone was in and performed very well, but they decided that they weren't going to invest with that sponsor, because they never knew what was happening. It was like, here's the deal, and then 2 years later, here's your money. We sold and we did really well. And while they did well, they didn't know what was happening along the way. So part of the role of asset management is making sure that you're giving your investors updates about what's happening on the property, so they know what the performance is and how you have to make decisions or changes, or anything that's going on. That's critical.
Yeah, well, you brought up a ton of stuff that I'm going to want to touch on here. So first of all, you talked about being a partner with a property manager, and finding one that suits the property. What type of questions, or how do you determine if that property manager is a good fit?
Yeah, so there are a few things. First, understanding like, what's the size of my property. So is it a 50 unit? Is it a 150 unit? You have to find a property manager that's used to or can manage the size property that you're working with. So, for example, sometimes when you have smaller size complexes, 30 units or 50 units or so, sometimes you'll see that there may be like single family property managers that may enter into that space and can say that that they can manage the property, and sometimes they can, but you want to make sure that you're finding a team that is going to be able to manage the, like, what's really happening on a 50 unit, and it's different than 50 different houses that may not have the same needs at the same time. If you have something specifically happening on the property, there's a flood, there are multiple residents that could be impacted by that. So you want to make sure that they're able to manage that. Also, sometimes some of the smaller properties, they may not be able to support a full-time person working on them. So you want to make sure that if you're, working with a manager that's maybe used to managing larger complexes, that your property is not going to be unduly burdened with expenses, because you're not going to be able to support, the cash flows don't really support having full-time staff on them. It just doesn't work. So you need to find a management company that has a strategy to manage smaller size properties, and they know what to do when there's a property less than 100 units, and that style. Also, I would say a management company that's very familiar with the area that you're going to be that you're going to have your property. So one of our first deals, we had a property that was in a very niche area in Atlanta, that was highly refugee area. Everybody was there, legally. It's just that they were fleeing their country. And so they're like, it's very, very different cultural dynamic. And you want to have a manager that understands that. I remember interviewing a few property managers before, we found the one that would work on it. And most of them were like, oh, wow, like that area, I don't really know, I'm not very comfortable with that, resident base or things like that. I appreciated them telling me that, because that was going to be that would have been a challenge. And so it was good that we found a property management company that not only they also managed their own properties. So they had a lot of properties in that area. So they were very familiar with the resident base. And so that's very niche, but like just in general, you want to know that the management company is very aware of what's happening in the market. It's better if they have presence there. They're already familiar with the demographic and really the psychographics of your resident base, so that they can help you with the marketing, and you can make sure you get your units filled at the best prices. So those are really important. So I would say it's the size unit, the demographic, and that also goes to whether it's an A, B, C class property. That's also something that you'd want to also take into consideration. And then also their level of reporting is important too. Smaller size property management companies or management companies that do single families, they may not necessarily have some of the more widely used systems that multifamily managers use, and you would need to have those so that you can understand the different metrics, lease ups, you can understand who's moving out, you can get finer details from the reporting about what's happening on the property, how many leases are coming up for renewal, how many are renewals, etc. And then also they should have a great read on whether you have opportunities to bump up your rent. Or are your rents too high, and you have to think about doing other measures on the property. So I think those are some of the key things. Yeah,
no, that makes a lot of sense. So with that, you also talked about setting expectations with your property management. I've found, and I'm sure my listeners are tired of hearing me say it, but for the most part, property managers and real estate investors, sometimes the interests aren't aligned. So to have that uncomfortable conversation up front versus ending with an uncomfortable conversation is probably pretty vital. So have you found that it's easier to have you set expectations, or do you find that a lot of the property managers kind of just say, this is the way we do it, take it or not?
Yeah, so that is also a great point, Jack, and something that we also try to talk to our property managers. Actually, we do talk to them about it prior to engaging with them. So we are going to be having weekly meetings with the property management company, and especially in the beginning, and sometimes depending on the strategy that we have, if it's a very capital intensive strategy, it may be more than once a week, but at least we're going to be meeting with them on a weekly basis to understand what's happening on the property. And that's really critical to make sure that is understood. I remember there was when we have one of our managers, we had gone from, I think it was actually, we started out with monthly meetings. I don't know how we did that, but it ended up working out for our investors, but I would not recommend that. It's got to be weekly. And so when we switched and we got another property, it was a realignment of, okay, this is a different type of property now. This is what we need to do. And so it was a bit challenging that switch over in the beginning. So they're aware of really what's happening in the beginning, and then the types of things that you're going to be looking at too, so they can also be focused on that.
Now let's talk a little bit about the actual budgets and the actual asset management. So you talked about, especially when you're doing syndication, the communication with your investors. What have you been doing different? Like you mentioned where some of the downfalls are with some of the other syndicators. People aren't going to invest if you're not communicating with them. How often do you communicate with your investors?
Yeah. So what we do is we have quarterly webinars for our investors. So a lot of times people think, okay, once you get your investors into the deal, then that's your investor relations piece and you're kind of done. And that's, I couldn't say further from the truth. So what we do is we'll put together our presentations to share with the investors how we're trending on a quarterly basis, and provide them with that information. We look at what's happening in terms of our occupancy and what's happening on the revenue and expense side. Go into details about capital expenditures and essentially how we're against our budget and our expectations. And then towards the end of the year or the beginning of the year, like around now when it's tax season, we're giving them a heads up about when to expect their K1s, the fact that we've distributed it to them. We touch base with them on that. When we're doing our payouts, we will also send emails to just tell them about the payments that they should be expecting, and actually, depending on the frequency of that, you may have additional communication with them, know what to expect and when to expect the payouts. And then again, when we ended up selling our deals, when we got into contract, if it wasn't something that came up in our quarterly meeting, because maybe it happened happened afterwards, we would then send them email about what's happening on the deal. So it's a constant communication back and forth, and of course answering questions timely when people ask.
Yeah, no, I can't imagine, especially when you're talking about as many units and properties that you're working with at this point. It's probably pretty vital, because a lot of the people that are investing with you on one deal, they're likely going to be the ones that you're fostering the relationship for the next deal.
Absolutely. I have investors that have been with me in all 5 deals so far, and that's our personal relationship that we built prior to me going into real estate, while they've been investing with me, and just throughout that time. And I'm grateful for that. I appreciate that, and I think so. It's really important to have that communication with them.
It sounds like this is, especially the financial piece of it, is something that you've kind of established early on in your real estate investing. What are some of those tips or strategies that you would recommend people, especially if they're starting out? What should they be getting in the habit of now, so that it's a better situation when they are managing 400 units and having 5 multifamily properties such as you?
Yeah. So, I mean, some of the things it actually really starts when you're picking your market. understanding what's happening in that market. We really like markets where, like everybody else does, where there's, you see the population growth, you see, jobs growth. That's so important because, people have to be able to, they need to be working to pay for your rent. So when you start seeing in unemployment rates, meaning they're going down, that those are, you're looking for markets that have that. And so then, so it starts from there, building the relationships with your property manager, also broker relationships, or if you have other ways to find deals off market, that's also a great thing to do, especially in this market where it's so competitive with the on market deals. But mix of several strategies to try to find your right deal. So then once you do that, one of the things is when you're doing your underwriting, that's why it's important. I always think it's important to find your property management team early so that you can review your pro forma with them, because like I said, their property manager, they're your partner. And so they are going to be working with you to achieve your goals. So I remember putting together a pro forma, and I thought that I was being conservative in a ramp up and for a deal we were looking at, and it was during COVID. And one of the things that the property manager mentioned to me is, look, you really need to factor in 3 additional months for your turns, because what's happening now is the crews are getting hit with COVID. There's going to be issues with, finding and making sure that the project is moving as quickly. I'm seeing a slowdown of X number of months, to kind of factor that in as well. And that was huge. That was a huge thing to include in there. Also on the expenses to, getting that sanity check. Yes, this makes sense. Or based on the size of the property, the number of units, we expect that, this should fall in line with some of the other properties that we've seen for water bills, et cetera, versus, just using that, just numbers that you may have pulled together a broker package. And then it just also making sure that from a revenue perspective for growth rates, that they're in line with what's happening also in the market. Yes, there may have been 12% growth last year, but it doesn't mean that that's what's going to happen for the next 6-7 years that you're holding the property. So, getting that sanity check from them is also really important up front.
Sure. So it sounds like it's a lot to do with your network and communication and understanding your market.
Yes. That's a great summary there. Yeah.
So, have you found that there are any kind of specific tools that you are leveraging to handle the asset management of it? I know property management is always, they're usually using property management oriented software. So outside, I've seen everything from as simple as an Excel spreadsheet for what we're talking about regarding asset management to QuickBooks or some other type of software of that nature.
Right. Yeah. So a lot of the tools that I use are reports that I can pull from my property manager. So, that helps me with the delinquencies. So if I want to see at any given point, where are we with collections? That's something that we're actively monitoring each week. It'll be different for some properties, but just depending on what the collections are, over the course of the month for your property, that's something you definitely want to monitor, because that's the blood of your business. So where are we with collections? Where are we with notices to vacate? So what apartments are coming up, how many apartments are offline, meaning how many are need to be rented. What's the status of the renovation for those? If possible, it's always good to be able to track how much it's costing to do the renovations. This way, that gives you a benchmark to understand the turn costs, because those are some of the most expensive costs that you have that are reoccurring as an operator, as an asset manager. So, and then your work orders. What types of work orders are coming up? Is it something that may be indicating that there's leaks within the property, or repairs that are always needed for leaks from the ceiling? So maybe that means a roof needs to get replaced, something that you hadn't anticipated before. Those are all really important, and then also just monitoring where we are versus our budget to the operating expenses. There are some expenses you're expecting to see come in, your regular trash and electricity and some utilities, and then I would say also just keeping a monitor on the property taxes, what's happening in the area as well. And I would just say, as an underwriting tip, and this is just something that, especially if you're new and starting out, it's easy to kind of miss it. It's just make sure that you're calculating your property tax. What's relevant for your county. So it may be that your county doesn't reassess for 2 years, but that means that you should be using your purchase price to do that reassessment whenever that happens, because you don't want to get caught with that level of a shortfall when you're managing your property.
Yeah, there's a lot of that's really important to point out, because it actually bit me. You buy a property, it's now because of the transaction, you've increased the property value and what they use for that type of an assessment, and now the taxes are higher than when you originally ran those numbers. So be mindful of that.
Right. Yeah. Yes. Yeah, absolutely.
So I know I don't know how you manage it either, but for me, I have to do, if you've ever read Profit First.
I have. Yes.
Yeah. I have to do that toward that type of strategy when it comes to managing property. So I actually I have an account outside of my other account where every month I'm just in a habit of setting aside a certain percentage of the rents aside into that account. And that's what it's used for when it comes to tax season.
Okay. Yes. Yeah. So
that's the only way I can keep track of everything.
Yeah, it's true. For some of our properties, actually, for most of them, our lenders taking it out for us. So we have that, and but you do have to double check, but just to make sure that they're not. If they're taking out less than what you need, then you need to make sure, for whatever their calculations may be, but it's going to be more. Take it out, like you said,
Yep.
So that you're not caught off guard later on.
Yeah. No, I appreciate this conversation, and it sounds like we could probably keep going here today. Again, I'm just going to direct everybody to bedrockreinvestors.com. Learn a little bit about what Sonya and her team are working on and their next project. I'm sure you keep everything updated there. If you're halfway as transparent as you are with your investors, I'm sure there's a ton of content on that website. So definitely check that out, bedrockreinvestors.com. And Sonya, before I let you go, is there a question you wished I would have asked you here today?
We covered a lot, but I would say that of the things, especially for people that are getting started in this environment right now, what should you do? How do you start out, or how do you keep going? And I would say, yes, it is a competitive environment, and there's a lot of times I think about that as well for myself. However, surround yourselves with people that support you. And if it's not people at home, there are groups, there are real estate investment groups, RIAs. There's a lot of online meetups. There's lots of opportunities to meet people. So I would say this is a people business in every aspect, and use the opportunities to connect with other people who are doing things that you want to do, or who can help you on your journey, and then you can support them also. So I would just say to folks to hang in there, to keep meeting people, and just to keep pushing forward.
No, this was a great conversation. You're welcome back anytime. I hope you'll consider coming back sometime. We could dive a lot deeper. I'd love to understand, for example, your underwriting process associated with your multifamily properties. So thank you so much for being here. And like I said, you're welcome back anytime.
That's so great. Thank you so much, Jack. This was fantastic. Thanks for having me.